Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the WealthyHomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
Thanks for having me back on, Jim.
Ross, yesterday, November 15th, the Canadian Real Estate Association reported exactly what you claimed they would report earlier last week. A listener in Vancouver asks, I'm a Scotiabank wealth management client, and Scotia stated Canadian home sales rose 8.6% in October, the largest increase since 2020 in July. My question is, how can Scotiabank be reporting so differently than Mr. K does on this show? Who is really telling us the truth?
Well, I don't think it's really whether or not it's the truth. It's just whether you're looking at the data or you're looking at the stats. So in the context of what this question is, look at, in October, year over year, home buyers were buying 14% fewer homes this year than they were last October. Okay, so the home trading market is 14% slower than what it was in October of last year. I'll also tell you that it's 26% slower than what it was at its peak earlier this year. Okay, what you're looking at when you're looking at Scotiabank, for the sake of the argument, Scotiabank. So I'm going to pull up their reports here. And here's Scotia. So this report is by Farah Amrin. Okay, so that's the author of this report. I believe she's an economist at Scotiabank. Okay, home sales rose by 8.6%. So what you said in the question is right here in her own report. The largest increase since July of 2020. Well, this is an amazing thing for us. Okay, so we would say that is insane. That's lunacy. That's hilarious. It's the biggest financial fraudulent statement that you're going to read this month. Home sales, the number of homes purchased this October is down from last October by 14%. It's 26% off the peak of the market from earlier this year. That is a huge slowdown. I would also tell you that, look, this is to be expected. Last year at this time was a one-off, okay? That has never happened in the history of Canadian real estate, where sales increased from June till October, okay? That has never, ever happened before, when sales increased from June to October. Well, guess what? Our economy and our home buying market was not shut down for a couple of months. So it's not a surprise that little window at that time was reversed. But then you also have to be honest. If you're going to report a record sales level last October, then you have to honestly admit that sales are way down this October. When you're looking at these housing analysts, what you have to understand is, did the listener give us a name? Anyways, I missed your name. Okay, so go to the previous years. Go to the previous year's report. So let's go to Scotiabank for October's report from last year, which they released again in November, because all they do is they take whatever the Canadian Trade Association for salespeople, the Canadian Real Estate Association, tells them, and they republish it. This is what they said last October. Home sales eased 0.7% lower in October. That's the sound of me smacking my forehead. Everybody in Canada knows what happened after October. Well, including October, right on through to the spring. Record after record after record, sales were claimed by organized real estate. Yet, here we have Scotiabank in the single biggest October in history, saying that sales had eased back 0.7%. Okay, so they were proven wrong, right? The following months, they were proven wrong. Sales continued to accelerate. So when we're measuring record sales, Scotiabank is telling their clients, oh, home sales have eased. This year, when we're measuring a 26% decrease in sales since peak until today, they're announcing that the sales are increasing. The market's getting busier. Like, I don't know what world, what planet these people live in. So I can tell you that if I drill down further to this question, I see that Scotiabank is referring to seasonally adjusted numbers. They're not actually talking about actual sales. They're talking about a mythological sales number created by a trade association for salespeople that last year said sales were declining when sales were increasing at a record pace, and this year says that sales are increasing almost as busy as it was back in July of 2020. At the same time, we're off by 26%. This is the nonsense that we have to put up with each day. And then you have to say, as a consumer, what am I to believe? Well, let's go through the rest of this report quickly. Movements in the market were broad-based with an uptick in sales spread out across the country. Falls, Hogwash, British Columbia, Ontario, Quebec, housing markets, the three biggest housing market provinces are all negative. What are they talking about? Yes, Alberta was a little bit busier, and yes, Calgary was a little bit busier, but that's because their trading cycle in those cities is flat. It's why their average purchase price is almost the same as what their average on-market price is. People don't understand. This is how simple this stuff is. Scotiabank goes on to say today, the increase in listings was, are you kidding me? Increase in listings? I think there's like 95,000 individual homes listed for sale on Realtor.ca today. It has never been that low. That has never been the smallest share of the homes that can go to market, privately owned tradable homes, that can go on market are listed on Realtor.ca right now. The smallest percentage in history. Yet they're saying there's an increase in listings. Folks, there were more listings on the market last month, let alone last year. All home types contributed to this month's price gains. Bull roar. Do they not look at the charts, even that the Canadian Real Estate Association publishes itself? Look, the city of Vancouver, the most expensive real estate in the country. Their share of sales for every 1,000 homes sold in Canada increased by 25%. Those homes didn't change provinces. They didn't change cities. It's just that a few more of them sold in October and were reported as sold as October. Then you have to do even a more granular check. Were those homes actually sold in October, or were they homes that were actually sold in September but then didn't get reported till October? Because the late sales in the city of Vancouver in September are more heavily weighted to the more expensive homes. So did that skew Vancouver's average price up this month, October, which in turn skewed the BC average price up, which in turn skewed the Canadian real estate benchmark prices up? And is this economist this ignorant to how a trade association manipulates the public that they're going to just simply shake their head and say, yep, whatever the Canadian Real Estate Association tells me must be true. I'm going to republish it. What do you think that their risk officer, their chief risk officer at Scotiabank would do if they found out or realized that this is false? If they went back and fact-checked, oh, why were we so wrong last October? We were recording a slowdown in the market when just the opposite happened. Well, this year you're recording an increase in the market when just the opposite is happening. Like, we just can't make this stuff up, folks. This is how it is. This is what people believe. This is why you have a housing bubble. This is why you're going to have to deal with the consequence of possibly a recession of a magnitude that no one is planning for.
We'll have more with Ross Kay right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. By the way, the person who asked the first question that we did was Faoud, I believe, Faud, asked from Vancouver. So thank you very much, Faoud, for the question.
Thank you, yeah.
Now, James from Toronto asks, Key Living is offering a shared equity opportunity in Toronto. They announced that the former Bank of Canada Governor, Mr. Polos, has joined their team. Does Ross believe this is a good way to get into the market?
If you've listened to this show over the last few years, you are reaching the culmination of everything we've been talking about, Jim. This is James in Toronto. Okay, James. James, Mark McLean is the broker that represents Key Living. Mark has been around a whole bunch of different real estate initiatives over the year. He's one of those guys who takes false credit for being in a position when the housing market happens to get busy. He has also really had great success convincing people to do what he wants them to do for his own gain. And Mark is with Key Living. Now, you're not going to find that when you click the team of Key Living today, but if you do a search, Life at Key, all one word, and then Mark McLean, well, you're going to find a page which no longer is referenced in the team page. Why is it no longer referenced? Well, I would guess that probably has something to do with that realtor having the listings on Realtor.ca. He has them actually listed on Realtor.ca. So, the Real Estate Council of Ontario, if they researched this, they would be able to charge him if someone issued a complaint. So that page is no longer discoverable under the team click as it was in the past. You will also notice on the page when you get there, the word brokerage, sales representative. He's actually called the VP of Business Development. There is not a single reference on this page to him being an active licensed realtor. They talk about his past, which included being the president of the Toronto Real Estate Board. But they don't say he is currently a realtor. Well, why don't they say that? Well, that's because the specialty of how their plan works. Because they've got a really, really, really special plan here, folks. It's so good. The man who single-handedly, Stephen Polos, caused the greatest amount of house price illusion under his tenure as governor of the Bank of Canada, the man who single-handedly left his position at the Bank of Canada, owning the highest share of the total mortgage debt originated under his tenure, the highest in history. Okay, there's more mortgage debt that was originated under his tenure at the Bank of Canada as a percentage than all of the other previous Bank of Canada governors. So this is the person that we're talking about. Polas is also the person who allowed a one-listing broker to give housing market metrics that appeared in the FSRs, Financial System Reviews. Housing market metrics that the data debunked. Assumptions about the housing market that are based on the broker's own ignorance to what an MLS system is designed to do. This is who we're talking about here, folks. Now, here is what he's doing. He made houses unaffordable for the people in Toronto, and now he's joining a company to say, oh, don't worry, I've got another scam I'm going to run on you. And this is how it works. In Ontario, there is a new set of laws that govern the rental real estate. These laws were written specifically to protect tenants while rewarding good landlords. Okay? You can't have one without the other, folks. If you're going to want to have the balance on the hands of the tenants, you're never going to have enough rental units. If you want to have the balance in the hands of the landlord, you're always going to have tenants that are disenfranchised. I believe the current set of rules are made for the good tenant and the good landlord. If you're a crappy tenant, you're in trouble. If you're a crappy landlord, you're in trouble. But if you're a good tenant and a good landlord, you are going to have a great relationship where the tenant has a very successful tenancy and the landlord has a financially successful landlordship. Here is how Key Living is presenting it. You become an owner resident. I'm looking at their website here, folks. Key at Life, all one word, .com. Key at Life, Life at Key, LIFEATKEY. The governor of the Bank of Canada has invested in this. Okay? This is how terrible things are, folks. You become an owner resident. Okay, so now they have to come up with a new word. You're not an owner and you're not a tenant, so we're gonna call you an owner resident. What that means is, since you're not a tenant, the current laws that protect you as a tenant in Ontario no longer apply, because now you are an owner resident. We have created a new definition to take your money away from you. It just takes $15,000. To become a co-owner with Key, the initial home equity investment is only 2.5% of the value of your suite, which will be around 15%. Okay, so here's how it goes, folks. We're going to ask you for 7 months rent up front. We're going to use that rent over the next 5 years to fund our program. We can credit $400 each month from your prepaid rent towards our monthly ongoing costs, and as a way to help us make this model look really attractive. Plus, for every $1 invested, owner residents get another $1 in leverage. Oh, interesting. So in other words, if you invest $1, they're going to say it's really $2, but the only lift you get is in the actual lift that happens. You don't get any leverage for the money. You don't get that $1. If the project goes up 5% for the sake of the argument, you're going to get 5 cents on that dollar. Remember that, folks. Now they come up with the new term, home ownership on demand. Enjoy the benefits of home ownership. Select the suite you want to co-own from the portfolio without having to be locked into a 25-year mortgage. Why would you want to be locked into a mortgage that you're paying down at a record pace when we could be doing that and you could be funding it for us? Look, folks, if I wanted to create the perfect unethical mortgaging scam possible, I would do this exact same format.
Ross, my question is, this sounds a whole lot like what Evergrande did and does.
Well,
people were told, like, you buy this suite, and of course no one's going to live in it, but, it's a great investment, and then they tell investors, unless you pay our latest bond payment, we're going to sell your thing off and you're going to be left with no property. There are riots in the streets of China over this, but of course we don't hear about it because of their censored media. But this sounds a whole lot like Evergrande's plan.
Okay, so what you said in there, Jim. So this is a lot of the problem with the discussion on housing. There is some truth, actually, some insight that you gave there. But you have to read through this whole program that they're offering, this whole scam. I'm going to call it a scam because that's how we would view it. To understand the connection between what you said and this program that they're sharing here. So it says they give it this picture of Lauren, an aspiring first-time home owner. Okay, so when I look at Lauren, I see my daughter. This girl was basically the same age as my daughter, and do you really think I would want someone to take advantage of my daughter this way? Not in a million years. They say if she contributes $15,000 to live in a Key suite on King West. Notice the terminology, folks, not to own it, to live in it. That's right. You're going to prepay 7 months of rent. She'll also pay roughly $22,050 a month as her monthly payment, of which $50 of her monthly payment will go towards growing Lauren's equity. I guess what Lauren's actually doing is, instead of paying $2,000 a month rent, she's paying $2,050, and they're giving her the $50 a month as an incentive. I bet you Lauren could just take the $50 and buy bank stock. The rest she pays is maintenance, taxes, and, here's a new term, residency costs. I wonder what kind of costs a corporation designed to take money from innocent young Canadians who can't afford to buy a home would be labeling as residency costs. And our co-financing, look at this new one, our co-financing benefit. Key will match Lauren's investment with $50,000 in debt. Thank you, Key. You were just so nice. Then they go on to say the following, because they're trying to sell you on this. Remember, folks, they don't show you the math. They don't show you how these big corporations are going to get rich off this. They only show you a story they want you to tell that's playing upon your position, a position that was created by Polaz himself. After 1 year, she receives an unexpected $15,000 gift from her grandmother. Wait a second. Okay, now we're going to tell you. They're going to use her grandmother, gives her an unexpected. Guess what? If it was a year earlier when she was buying this place, and Lauren had been talking to her grandma, and her grandma was planning on giving her $15,000, there would have been some arrangement made with the grandmother so she could have got that $15,000 and bought a house of her own. Not only that, Lauren could have said to her grandmother, Grandma, look, I really appreciate you. I really appreciate what you're trying to do for me. Okay, I will borrow the money from you, $15,000, on an interest-free loan, and I will repay that money 5 or 10 years from now. And the grandmother said, well, Lauren, don't worry. That's my gift. No, Grandma, look, with the way that technology is evolving, you could live for another 10 years than you're planning, Grandma. You may need that $15,000. By you helping me today, I can give you that money back, and it's not going to hurt me one iota. What it may do is allow you to have a great extra life when you get that $15,000 back. They don't talk about it. Then they go into their all manipulation. What this is, long story short, Jim, then they use a forecast of where they equate the last 5 years of the housing market in Toronto as a reliable forward-looking appreciation index, because that is the scam that's at the end of this term, where they say they give the nugget, oh, she's going to share in any appreciation. So what they've done is this. Interest rates have fallen for 35 years. We were at the end of the interest rate cycle, which happened in the last 5 years. The greatest amount of house price appreciation happens when the greatest amount of house price illusion is being created, which is the last 5 years in Toronto. Toronto has never returned these kind of returns in its history. An honest, ethical business by someone who really wants to help people out would have said, well, look, Lauren, over the last 25 years, real estate in Toronto has averaged X. We're going to use that number. Or, Lauren, over the last 40 years, since interest rates started to decline, property prices have increased Y in Toronto over a compound annual growth rate. So that's the number we're going to use, because it's half of what they're telling her in this example. So, folks, this is how you're manipulated by all these people. This is one of... when I check the team that they have working for them, okay, I can see that they're overvaluing the properties on closing from our perspective, which in turn allows them to say, oh, you saved the 6%. The benefit of this model is you don't have to spend, it even says it, if I'm not mistaken, in the thing. When she sells, she's not going to incur the 6% cost to get her equity out. Well, guess what, folks? Lauren's not selling the unit. Key Living is not selling the unit, okay? They're telling her if she gives us 75 days notice, she will receive her home equity plus any appreciation, brackets, based on the current value of her suite. Folks, what do you think this unit is going to be valued at? This is not a regular condo. This is a condo whose value is created through the model that they have created themselves. Obviously, if you're going to market with this property, the number of people who will buy it under that context is way less. So the value that she's going to have on it is going to be lower than what it would have been as a condominium. And if they go to market when the market is soft at all, nobody's going to want to buy this. They're going to see it's a scam. So there will be no appreciation. So they say 75. So then the scam works this way. Oh, by the way, this is the price on 75 days notice. If you go to 120 days notice, this is a little bit the way that we can offset it. Remember, folks, they have 7 months of rent already booked from Lauren. Lauren has prepaid 7 months of rent. Then they can start to say to Lauren, hey, if you can just wait a month and we'll just deduct that from your equity owing. And maybe we can get a higher price for your property. I have watched this nonsense go on for 35 years. My dad showed me how to watch against shills and hucksters who work this way. When I look at this program, that's what I see. You can tell I'm animated today because Polaz himself bought into this scam. So that tells you how screwed up he made our housing market. It tells you just how bad it was that he included these ludicrous things in the FSR report and held it as being true. Look, Rob Richards, the CEO and co-founder of Key Living, is clueless to what he's actually doing. Daniel Dubois, the president and co-founder, some guy with Airbnb and a couple of other things, he's clueless to what he's actually doing. I say they're clueless because I don't believe those guys are that unethical. I don't believe that they are that mean. I don't believe that they would take advantage and seek to raise hundreds of millions of dollars in order to get thousands of young and innocent Canadian families into this situation. Polaz, though, is a different story. Polaz is the man who is responsible for these young people not being able to buy an affordable home. And here he is, profiteering. Gee, what bank of governor else do we found did the exact same thing? Didn't Carney boost up the profits of Brookfield and Royal LePage under his tenure at Bank of Canada, governor? Didn't he then leave and go over to the Bank of England, where in turn Brookfield management made hundreds of millions of dollars on the Canary Wharf investment? Where is Carney working today, folks? He's working at Brookfield. Anybody who expects me to believe that these people, Carney and Polaz, are this incompetent and this ignorant to how housing markets function is asking too much. And I see it today when I see Polaz signing up and with a press release that went across the air today saying that this is a good thing. It's so good that he's going to invest in it. Sure, folks, you want to fall for the scam, go right ahead.
Some quick questions for you, Ross. Ross, you constantly say housing markets are provincial. My realtor says markets are local. My bank says real estate markets are broad-based. What is it?
Housing markets in Canada are provincial. Your local market will be impacted by what's happening in the rest of the province. That even includes Toronto, folks. My bank says that they're broad-based. What your bank is saying is they're repeating talking commentary, a narrative created by the Canadian Real Estate Association to allow sales commissions to be earned. Because the bank didn't say they're provincial. The reason why Alberta is the only provincial, big four provincial market that is producing a higher trading rate is because that market was already so stale. British Columbia, Ontario, Quebec have all come off the heat. They're all cooling now, okay? It's got nothing to do with being broad-based. It's the cyclical pattern that homes are traded under. What happens this time is we had the pandemic. So that beautiful housing market that you can see in Calgary in real time, where an increase in sales of 400 this month will record an increase in sales of 400 the next month, with a reciprocal increase in average purchase price as that group of buyers shifts up the property ladder. Again, it has nothing to do with house price. It's where the share of sales are happening. All housing markets are provincial. What happened in London was a consequence of Toronto. What happened in Burlington is a consequence of Hamilton. What happens in Windsor is a consequence of what happens in London and Cambridge. What happens in Muskoka is a consequence of the GTA. What happens in the GTA is a consequence of what is happening in all other markets, because all other markets' equity flows into the city of Toronto, the prime market in this province. Same thing happens in Vancouver, in British Columbia with Vancouver. Same thing happens with Montreal and Quebec. Same thing, but it's split between Edmonton and Calgary in Alberta. That's why it's a provincial market.
Another question. My agent is telling me there's a shortage of listings and I need to make compromises because of this imbalance. I read where Mr. K said there are 3 to 4 times more homes to choose from than what my agent is showing me. Where do I find these homes my agent isn't showing me?
Well, you're going to see them, most of them, they're on Realtor.ca. They're just not there today. Your real estate agent wants you to buy a house as soon as possible. So they tell you, this is the inventory you get to select from. What you need to say is, when do you want to be in your house? What is the latest closing date you're willing to accept? If that closing date is 3 months out, then you probably have 2 months of brand new listings to wait for. Normally, home buyers have 90 days to search for a home. Okay, so historically, over the last 30 years, the average home buyer has been actively searching, ready, willing, able to buy a home for more than 90 days. That means over those 90 days, you are going to see a slew of listings that you can't see today. Your real estate agent doesn't want you to wait and look. They want you to believe that if you miss this one that you're looking at right now, another one won't come available. A great buyer's agent is someone who's able to tell their home buyers, wait, don't worry. If that home sells, there'll be more that come for sale. And odds are, if the next one that comes for sale is going to be better than the one you're looking at today, even if that home was a little tiny bit higher price. And even if you couldn't negotiate the lower price on it, it may have $10, $20, $30, $50,000 of upgrades that have already been done to the property. So when we start to get into the price discussion, let's be sure we're talking about apples to apples and not apples to pears. When you go to market with a buyer, a home buyer, the home buyer has a long period of time to search for homes. If the home buyer is an existing owner who sells their home, odds are they're going to have a 4 or 5 month closing date. If you get closer to June or closer to December, that window might drop down to 3 to 4 months. Okay, well then maybe that owner should wait for the next cycle, the next buying period. So when you hear a realtor tell you, oh, active inventory, well, if that active inventory was so true, then why is the failure rate 70% across Canada? Why are 70% of listings failing to sell in a month? Why are they failing? Why does your local real estate board not publish this? All you have to do is wait. You can wait. Your real estate agent doesn't want you to wait. And they have an entire infrastructure that is built up to convince you to act today. Because if you wait till tomorrow, you're going to miss out on something. Oh, wait a second. Isn't that called FOMO?
FOMO all the way. Another question here. I read where home equity lines of credit have increased 57% while rents have only gone up 1.6% in a year. Is there a correlation between HELOCs and rent prices?
Well, first of all, folks, when you hear rents have jumped 1.6%, understand that is below inflation. Okay? That is below inflation. That means, fair and square speaking, rents are lower if you hear that comment. Okay? I would also tell you that the rent of new tenancies will probably be higher than that 1.6%. But these people who are making comments about rental are simply websites looking to get people to put their houses on to rent so they can make a buck. Okay? They don't understand how the market works. They don't understand how you measure rental increases. And I know this because I look at what StatsCan and all these other places are doing. And it's like something that a grade 2 student would do. You would never do that if you understood how the MLS system is designed for new tenancy and higher quality rental. You also have to understand that if they said lines of credit increased 57%, that infers people have purchased rental properties. That's what it infers. Okay, so if they purchase rental properties, usually those investors are buying brand new. That in turn would need brand new properties come available to be leased. They are brand new. They are a higher quality. Now you're telling me there's an onslaught of rentals that have come on the market. Those are the ones that generally go on the MLS systems. Those rentals have been picked up and they're only getting 1.6% more in rent when inflation is already double that. This is why all of these comments about mortgage debt don't add up. It means that they won't withstand a peer review. They will withstand opinions, beliefs, and thought, but they won't withstand a peer review. You have to also understand, folks, that the Canadian banks do not share their mortgage portfolio structure with anyone. They don't give it to the financial services overseers. They don't give it to the Bank of Canada. They don't give it to the Minister of Finance. Those are all proprietary. They have legal protections for them that they don't have to tell anybody how their mortgage portfolios are structured. Because if they disclosed how their mortgage portfolios are structured, and one bank has a better structured portfolio than another bank, then the share price of the poorly structured portfolio bank is going to drop. And the share price of the bank with a better structured mortgage portfolio is going to increase, which is why you don't see these portfolios. So unless you're able to read through a big six Canadian banks' quarterly earnings reports, and you know how to read them in the context of the previous reports and previous year's reports, and in the context of the mortgage debt that is being recorded by StatsCan and the OSFI, you have no idea what I'm talking about. But it's really simple, folks. It's just simple math. If you know the formula, you plug the numbers in, and the number comes out. So you know how it's probably structured. You're not going to be 100%, but you're going to know what where the average mortgage is in its amortization schedule. That means you're going to know how quickly their mortgage debt is being paid down by the mortgage principal is being paid off. That tells you how much new mortgage origination, how much new mortgage debt was actually booked at that bank. Because if you don't have those two calculations, you don't know what the real true new mortgage debt was booked. This is why we laugh at every month when we hear people talking about Canada's debt, $1.7 trillion in debt. It doesn't matter what that number is, folks. What matters is how quickly we're paying it off, where the nation is in the national amortization schedule. What month are they in? Are they in the second month of the first year? Are they in the third month of the 12th year? Are they in the second month of the 10th year? Or is it really the fifth month of the 17th year? Because if you don't know where that is, you have no idea of calculating what the actual mortgage debt risk is. And this is where these conversations become problematic, because people believe what they hear and they take actions upon it. The result is the governor of the Bank of Canada joining up with a way to extract as much money as possible from innocent young Canadian families who cannot buy a home because of the policies he created, who now, that money is going to go to the wealthy elite of this society, including pension funds, and the poor young Canadian family is going to be the way to pay the price, is going to be the one to pay the price. You need a structured homeownership strategy that you're fully aware of, you understand the math, and something that you have rationally made a decision on for yourself. You don't need to listen to me. You don't need to listen to your parents. You don't need to some one listing broker. You don't need to listen to some banking economist. You need to have a spreadsheet in front of you where you can look, make a rational decision, and set up the rest of your life.
Ross, there was a survey done in September that found 96% of senior Ontario house owners plan to stay in their homes as long as possible. What's that do for the future supply of houses for people?
Well, you see, that's a great survey. Okay, so here's a mistake that I made. Almost 3 decades ago now, right? It was the early 90s. There was a book came out, Pig and the Python. Okay, so as a real estate salesman, okay, these sort of things were important to me because, I was targeting what home sellers I was going to go after. Do I go after people early in the property ladder, or should I be going at people later in the property ladder, people way up in the high steps? Okay, so I made the mistake. I listened to these economists, these sociologists who are writing this stuff, and I believed them because their story was really good. It made sense. What I didn't take into consideration is a medicine. I didn't take into consideration how quickly medicine would evolve. I had no idea that from when I started selling houses till today, the average lifespan of a Canadian has increased 7 years. My thought process didn't include that aspect. And this is what we're looking at now. These people, I'll tell you, Jim, the reason they don't want to leave their home is because we're not building alternatives for them. These people want to leave their home. Okay? most of these people want to live a more fulfilling life with a smaller home that is of a higher quality, except the government isn't building them. The government isn't legislating that these homes are being built. Instead, what they're continuing to doing is this missing middle myth. Let's keep jamming more people into the middle of the property ladder. Well, guess what, folks? You keep putting more people into the middle of the property ladder, okay, the people are going to start to fall off. There's going to be a big bulge right there because the people in the top of the property ladder are not going to get off. What you want to do is you want to build out your housing stock so those people will see an alternative for the next 20, 30 years of their life, and they will move. They are more active people. They are more socially involved people. There are people who still want to be involved with their family. They are people who are maybe want to go back to school. They are people who want to continue involved and live great lives. If you threaten to take away their house and you don't give them an alternative of where to go, because they don't want to go to a condo, folks. They are too smart to want to move to a tiny condo. They want a nice little detached bungalow somewhere that has a backyard and maybe a garden in an environment that they're happy with, where they still can have their family members come over and visit, where they can lock it up and maybe go for a visit out in Newfoundland, or take a trip out to British Columbia, or for British Columbia, take a trip out to Ontario. Okay, folks? Those houses aren't being built. So if your context, your perspective is not that of the person who's living in that home, if your perspective is not one of how the improvement in medical technology is jumping huge leaps right now, then your perspective is the one that I would have had back in the 90s when those books were coming out. My perspective has changed. We now talk to a group of doctors on a regular basis, people that I have connected with over the years, and people who are involved directly in how medicine is evolving right now. And the stuff that they're telling me, it's amazing, folks, because this is how they are viewing their own lives. When you have medical researchers telling you that they expect to be working actively, happily, into their 80s because of the technology changes that are coming with health, you have to believe these people. Because these people are setting up their lives to be this way. Jim, you said people don't want to move out of their houses. Of course they don't. They're going to still be working. They're going to be taking high-level jobs. These people are still going to be going on, as will the next generation behind them. I mean, it's highly likely the next generation behind them, people in their 30s today, they very well could live to be 120 years old. If your housing stock isn't evolving to accommodate that, you have a problem. The same problem that we have today. Our housing stock in Canada stopped evolving in 2004, and it started to decline. It started to not represent the population. The reason you have problems today are problems that started back in 2004, because people didn't understand how a housing market, the housing stock, has to evolve with the population. If we're going to bring 400,000 new Canadians into this country, then our housing stock has to change to reflect that. You can't have immigration and maintain a greenbelt. You can't have a growing population and a higher quality of life by shoving people into tiny condos. All you're going to do is create an imbalance in the housing stock, which causes problems. So this survey, Jim, I believe would probably going to be correct. It's going to be proven correct. I firmly believe if you can hold out for the next 10 years, someone my age, you can hold out for the next 10 years, you may get an extra 10 years on your life. That's what I truly believe.
Doug Casey said, Jim, yes, this would have been 3 years ago. Doug Casey, look him up, one of the most noted investors in the world. He said in 10 years, that was that time, so we're looking at 7, they'll be able to grow you a new heart, new set of lungs, a new kidney. The brain is still the toughest nut to crack, but someday maybe that too, but you'll have to relearn everything. So you can regrow these major organs in a few years. So an 82-year life expectancy in BC. And by the way, BC has the second highest life expectancy in the world, tied with Japan. The average age might be 92 or 108. He said about 120 years seems to be the limit, even with the new technology for growing you new parts. Things just eventually wear out. But that's a great thing to look forward to. Also in that survey, where 96% of senior house owners in Ontario said the reasons why they didn't want to move out of their house, number one, the pandemic showed that long-term care homes are death camps. And we can't dispute that. Thousands died there, and the government still hasn't solved that problem. They don't want to leave their friends, and new condos are so expensive. You sell your family home for $1.2 million. The condo's $900,000. That $300,000 isn't enough to kick you out of your house.
So imagine, Jim, we knew our population's aging decades ago. We knew that my parents, within the next 5 years at the latest, are going to have to move into assisted living somewhere. Everybody in the country knew this, but our politicians have done nothing. And we continue to elect these people over and over and over. You know what I think it is, Jim? I think it's that it's not till later in life that you gain the perspective when you're able to look back at your own life, your own beliefs, your own experiences, that you begin to question how things function. And because I can't believe that we do not have enough I'm going to use the wording, old age homes in this country. I cannot believe that we did not have enough PPE in this country for COVID. You know, I also can't believe they found a vaccine in a year. The technology really was there, and they found a vaccine in a year.
Yeah, and then we have so many people who won't take it.
Well, yeah, but a year later, they're telling us we're going to need a third shot. So I think this is what you need to plan way, way ahead.
And governments don't plan ahead. Don't forget, your average politician serves a term of 4 years. All they worry about is getting reelected. Planning for the future is not their forte. Last thing from it. Their job number 1, number 2, number 5, number 50 is get reelected. You tell people what they want to hear, not what they need to hear, in the hopes of getting reelected. Larry, the former mayor of the guy that Da Vinci's inquest was based on, was mayor of Vancouver for 1 year or 1 term because he said, I don't care about re-election. I'm here to help out with the drug crisis. Larry Campbell became a senator. You see, he was one of the few politicians I have ever met who said, I don't care about re-election. This is stuff that needs to be done. I've seen the cost in lives of the opioid crisis, and back then it was heroin overdoses. Doesn't matter what you're overdosing from. But do governments care? Look, overdosing people probably don't vote. And even if they did, there's not enough of them to re-elect a party or so on. So, no, it's not a priority for the government. Because of the opioid crisis in the U.S., their average life expectancy's gone down 2 years.
Look,
but
Jim,
they don't care because those people don't vote.
Give me a plan. If you're telling me that you've got a cure for affordable housing, give me your plan. Show me your plan. I want to see the plan over the next 20 years.
Think better.
Like I say, give me a plan.
Ross, thank you so much for chatting with me.
Thanks, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet, our YouTube channel, Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of House Street Media Incorporated.